There's signs everywhere and everybody's ignoring them. The economists are telling you what's about to happen. All the big money is telling you what's going to happen. But we just are so caught up in making money because money's easy right now, but it's creating weak minds. And one of the other things that just happened recently, and I'd love your take on this, is Zillow. We all know what Zillow is. Zillow's a monster in the real estate world, and I remember years ago, I was in Florida for a mastermind and I went on the beach because people really didn't understand iBuyers and why is it that Zillow and all these iBuyers are overpaying for these houses that are being sold. They'll pay any price. Well, Zillow did that. And so did the iBuyers, because they were taking Wall Street money, moving it from Wall Street, which was riskier, okay, and moving it into Main Street, which is real estate. And then they were overpaying for properties because that's the only model that they had. And then they had the assets on the balance sheet. So for a big company like a Zillow or, I don't know, you can use Blackstone, BlackRock, these big funds and these big hedge funds, then it's just a number on a balance sheet, which then can produce an income by renting it or by, selling it and then holding the mortgage on it, which, they all have mortgage companies. So Zillow recently just announced earnings and they got decimated because they are showing massive, massive losses on this housing portfolio that they have been acquiring for years, overpaying for it. And now for the first time, people are starting to look at it and say, wait a second, Zillow is losing money on all these houses. They know what they're doing. So we're doing the same thing and buying houses and flipping them, and we're making money because we're riding this appreciation train up. What happens when the train stops? And when real estate values come down, which we are not far away from, you're all going to lose money. So again, you got to change your strategy. I think the rental strategy is pretty solid if you're not drastically overpaying, but you have to go into real estate in today's environment, knowing that if you want to exit that real estate, you're probably not going to be able to sell it for more than what you paid for it. And hey, if you're okay with that, if you're like, I'm in this for the long haul, everybody says that. No, you're not, but you can believe that. I'm in this for the long haul. Good for you. Just realize it could be 3 years, 5 years, it could be a decade before your property is worth what you paid for it. So I sure hope the rent is good. And I sure hope you know how to run the numbers to see what that net rental income is, because that's what you're going to be dealing with.
Well, and I completely agree. And about Zillow, they just overplayed it. We have Open Door here. Same thing. They're out of California, I think.
Big hedge fund.
And so they can absorb. We also saw where Zillow was laying off a bunch of people because they've got to absorb their losses somehow. So what they're doing is they still have the real estate portfolio, but they won't have the people capital, right? So they're making a business decision. So I think it's a good wake up call, because I can't even tell you how many people I talk to. They want to be mentored, be coached or whatever. And they're like, well, and I said, you need a solid source to get your numbers right for properties and value. Well, I'm going to use Zillow. Did you? And this was just yesterday. I had the conversation and I'm like, did you see what happened to Zillow? And a lot of people base, a lot of flippers, wholesalers will base their number on Zillow. Because why? Not because they understand what Zillow's doing, but because Zillow's been around for a long time. Zillow I think they bought Showing Time, that's like through realtors. So it's getting very messy. It's getting meshed.